Good evening, everyone. I will start this Stock Durbar in another minute. By the time we'll do some checks. Am I audible? And can you see the MarketSmith India web page? If yes, please reply in the chat box. Thanks, Ratnakar and Rahul. Yes, we shall start in another 30 to 40 seconds. Participants are joining now. A very good evening, everyone. Welcome to Stock Durbar with MarketSmith India's team. My name is Rakshaka Kongari, Equity Research Analyst. In this Stock Durbar, we have with our Head of Research, Mr. Mayuresh Joshi, and my colleague, Wakhar Khan. We three will take this session forward. First, let's discuss about how the Nifty is placed and other key indices. We also talk about major events which have happened last week and which are happening as we speak. So this is Nifty's daily chart from MarketSmith web page. You can see Nifty for the last 6 trading sessions, Nifty closed higher. And also it reclaimed its 100 and 200 DMS last week, which is a very good sign. Today's session has been very highly volatile. Thanks, Anubhav. Today's session has been highly volatile, mostly because of weekly expiry. Today being the Thursday, weekly contracts have expired. Apart from that, the overall trend in the general market is upward. The buying has been on the broad-based as well. Nifty mid-cap, small-cap have been seeing a good buying happening. Recently, we have changed the market status to confirmed uptrend around this area. That is on July 18th when Nifty gave us a follow today. Since then, Nifty moved around more than 7%, and we have started adding stocks to our model portfolio as well during this time. Let's discuss about what are the major events which are happening currently. During the July month, Nifty has outpaced most of the global counterparts. That is, Nifty closed more than 10% higher in July. That is when the momentum has picked up after highly volatile weeks, highly volatile months. Starting from January, February, Nifty has been highly volatile. You can see lots of gap ups and gap downs which have happened in the last 2 to 3 months. After making a bottom of 1500 183, Nifty found some kind of momentum. You can see here it has rallied more than 2000 points and also reclaimed all its key moving averages. FIS, let's talk about the foreign institutional investors as well. We'll take questions after this small introduction about the market. We'll discuss about everything about our methodology, and we'll answer your queries on stocks as well. Talking about foreign investors, FDI foreign direct investments inflows have been at all-time highs for FY22. They have received around, India has received around 6 trillion rupees of investments. Foreign portfolio investments for July have turned net buyers after 9 months. This is very good sign for the Indian markets. FPIs have bought around 5,000 crores in Indian market in July. This is a very good sign. Also, FDI is at all-time highs in FY22. These are a couple of pointers regarding foreign investments which are looking positive for Indian market. India's manufacturing activity, that is PMI manufacturing activity, has came in at highest in 8 months. That is for July, PMI came in at 56.4. Again, a positive sign for markets. Indian rupee, which was as mentioned, Mr. Deepak, I will talk about your queries, stock specific queries after this introduction. Indian rupee has appreciated after reaching a depreciation of around 80 levels towards against US dollar. It reached 78 to 79 recently. There is some kind of appreciation happened there as well. Currently, RBI MPC meeting, that is bi-monthly meeting, is going on. It started yesterday. The outcome is expected to be announced tomorrow. That is a 3-day event starting yesterday, today, and tomorrow. The overall outcome of the MPC meeting will be out tomorrow. So the market will again be volatile tomorrow session as well. Most of the key pointers which will be discussed is that inflation, which has been a major concern overall globally, that will be addressed by RBI governor as well. Globally, as we talk about global inflation, US Federal Reserve has also increased repo rate by 75 BPS recently. The US Fed has increased total 225 BPS of repo hike. Indian RBI has also increased repo rate by 90 BPS. That is, in May, they have increased 40 BPS, and in June MPC meeting, they have increased 50 BPS. Currently, RBI repo rate is at 4.9%. Most of the analysts expect another 25 to 50 BPS of rate hike in this coming meeting as well. So this is about RBI's MPC meeting outcome, which is expected tomorrow. Again, GST collections for July, which is another positive sign, jumped 28% year-on-year basis to 1.49 trillion. This is the second highest monthly ever GST collections by the Indian government. I'm moving on to 5G spectrum, which has recently happened. Government is about to make another 1.5 trillion crores of rupees in this auction. Around Jio has taken major chunk of the spectrum. They have spent around 88. They are going to spend around 88,000 crores of rupees, followed by Airtel with 43,000 crores. Adani, which has been in the news about the spectrum auction, they have clearly mentioned that the spectrum they have taken will be only for enterprise solutions, not for retail. So this should be taken care. They are going to spend around 212 crores for this spectrum. Another news is that Airtel is about to roll out 5G services in India in August itself. They have made a pact with Ericsson and Nokia, Samsung. This is a positive for Airtel. And so if the Airtel comes up with 5G services, soon we might see Jio also following the race. I'm moving on to major indices. Let's talk about Nifty Bank, which is another major index and which has the highest weightage in Indian Nifty index. You can see Nifty Bank also similarly trending higher. It is mostly similar towards when compared to Nifty's daily chart. The index has reclaimed its 50 and everything like 50, 100, 200 DMS. Today's candle is not updated here, but today it was a highly volatile session again because of weekly expiry of both the Nifty and Bank Nifty options. Major constituents of Nifty Bank, starting with HDFC Bank, ICICI Bank, they have reported a good set of numbers. one of the key theme which is happening in the banking space is that asset quality has been improving for most of the banks, which is a very good sign. IDFC Bank reported recently. IDFC First has reported a very good set of numbers. Its revenue has increased drastically, and asset quality has also improved. That is the reason the stock gave this 12% of up move on the day of results, that is on Monday. And moving on, let's talk about Nifty Auto. Auto numbers have come in for the month of July. Most of the auto companies have reported a good set of numbers year-on-year basis. They have been the sales have increased year-on-year basis. Tata Motors has shown very good growth rate in sales. Sales have increased 51%. Ashok Leyland also shown 58% of growth in terms of their volume for the month of July. M&M also reported a very good set of numbers. Also, the bookings for a new model, that is the Scorpio, has started. And the bookings were at record level. Within the first 30 minutes, around 1 lakh SUVs were booked, which is a record for SUVs in India. So the company is expected to generate around 16 to 18,000 crores because of M&M Scorpio model sales. Analysts expect that operating profits will improve in the coming quarters as the company manufactures this model and they start rolling out to the customers. That is the reason you can see Nifty Auto is trading at all-time highs. Whereas the other indices are not much trading at all-time highs. This is the only index which is leading the current market. If you look at M&M here, also M&M also is on the similar path. You can see stock broke out way before market was in confirmed uptrend. When the market was highly volatile, this stock was showing good signs of momentum because of their exploration towards electric vehicles and the technology spending they have done towards SUVs as well. Currently, you can see stock is trading at all-time highs. Okay, I'll talk about Nifty 50 again. Bo is asking about Nifty 50. If you look at, if you are looking for a support for Nifty 50 at this current level, definitely 200 EMA should be looked at. That is 17,000 level, another 2% from the current market price. That should give a good support for the Nifty index because the 200 EMA is a long-term moving average and we should expect Nifty to hold that level. You can see in this couple of sessions, a couple of times you can see Nifty given good support at 200 EMA. Talking about resistance, we are at 7% off-wise. So at this level, like 18,100, 18,350 and 18,600 might act as some kind of resistance because there is overhead supply here. So investors who have bought at these levels will try to book out in order to break even. So once that level is reclaimed and Nifty trades above that level, then there will be no resistance for the Nifty. We might expect more rally happening once the Nifty makes a new high from this current market. Okay, and now I think we'll discuss about a few stocks. Already stock-related queries are coming in.
Hey, Rajshekhar, thanks. Can you hear me? Just wanted to give my two takes.
Yes, Myrish, I can hear. You can hear.
Yeah, audible, Myrish. Audible.
Sure. Thanks for the opening remarks. So, guys, I think two things are happening, right? One, on the global macro front, vis-a-vis the Indian macros, and second, the earnings landscape. Because we are in the midst of the earnings season right now. Now, on the global macro front, we've all seen what has happened. Pelosi landed in Taiwan, very jittery day yesterday for global markets, but they bounced back very, very smartly as well, right? China is conducting a lot of drills off the coast of Taipei, I mean, there has been a lot of increased military activity around that region as well. So I think that is causing some amount of concern on what kind of actions China might take specifically in this region, and does that probably trigger some sort of a mess on the geopolitical landscape. The second aspect is the Bank of England has just increased its interest rates by 50 bips. Now, I was going through the document as Rajshekhar was speaking in and their press release. They're actually seeing a long drawn slowdown in the UK markets. The ECB, on a similar note and on a similar footing, is expected to increase interest rates quite significantly. And what we have probably seen in terms of key data points is that purchases, the discretionary spending or the purchases from the general retail public has started coming down. I think Bank of England is clearly warning, so will be the ECB's warning, that there is apparent slowdown into the market at this point of time. And if this gets entrenched in terms of all these factors playing out, specifically Ukrainian petrol and gas, as winter is also approaching in the next couple of months, we're probably expected to see a further hit, probably that can happen in terms of spending and savings both. At the same time, there have been data points coming out of the US market as well. Unemployment figures are slowly and steadily inching up. We just heard news yesterday that Walmart has started laying down people. I was just reading news that Sundar Pichai is saying that maybe we have got too many employees and not that much work. So I think there have been some subtle hints that are getting pointed out by the large guys in the US on some sort of a slowdown that the corporates are also facing. On the other hand, the silver lining probably becomes that the inflation number, which had hit an all-time high across the globe, maybe Europe and the Eurozone, maybe a few weeks more, but it should start dwindling downwards. However, the outside risk, as I said, is as winter approaches and if supply is dwindling down, both in terms of gas as well as crude and LNG to a large extent, you might have some sort of a squeeze into those markets, which means that prices of these commodities can move significantly higher if if Russia probably decides to supply far lesser around the winter season. So I think those are ifs and buts, but I think there are some parallels being drawn. The Shell CEO, in his interview a few weeks back, has highlighted these risks for the Eurozone as well. For the Americas, I think the whole point in terms of recessionary trends, a few of their governors are saying that signs are healthy, which obviously seem to be the right parameters because employment is still steady, even if unemployment figures are inching higher. Corporate earnings have relatively remained strong, except a few of these large retailers where they're sitting on large inventories because of these factors where people do not want to spend excessively and aggressively in lieu of anticipating if something goes wrong or there is a shed of jobs or so on and so forth. So they have to bank on something in terms of their savings itself. New mortgage sales, new home sales are probably coming down or remaining steady as well. And an interesting point that I was also reading is the car mortgages. Car mortgages are actually inching higher in the number of days overdue, which is more than 90 days. 2 in 12 or 1 in 12 American. I'm not sure of this figure, 1 or 2, but I think that figure is inching higher, where that number of days overdue, even on car mortgages, has started going high. So to answer the question, somebody asked whether a recession will come or not. I think, or are we in the midst of a recession? You're largely being subject to demand supply dynamics. And at this point of time, though, everybody is hopeful that second half there will be a tremendous amount of recovery with commodity prices going down. It really needs to be seen whether this is a well-entrenched inflation, because we've been on a roll in terms of liquidity expansion over the last few years. And ultimately, as that unwinding and rate increases are started to happen, you'll probably see some chinks in the armor coming in. So I think FIs have been buying into the market is a very positive sign. But you need to be very, very cautious in terms of how the data placement is being put forth. On the other hand, I think a few of the stocks in terms of earnings is extremely, extremely positive. So I think a few stocks in the broader universe have given brilliant set of numbers. A few stocks that we added or in the portfolio as a compliance disclosure have given good set of numbers. The guidance has been good. Vakar attended, Rajshekhar attended a few con calls, myself as well. I was reading the notes put out by the team. I think the outlook itself is very, very good. Commodity consumers obviously are going to benefit. So in this entire scheme of things, domestic consumers and consumables are going to benefit more, because I think the reliance in terms of exports, if the world probably goes into a slowdown, export-oriented sectors probably will feel a little bit of a pinch. Will India get affected? Obviously, yes, because I think the demand, as demand starts going down, your exports take a hit. Imports with crude coming down will also reflect in terms of a lower trade deficit. But somewhere I think with lower exports coming through, the activity probably gets a little bit hampered. But still we'll be better off, at least at this point of time, in terms of our overall numbers when it comes to trade deficit, fiscal deficit. The tax collections should relatively hold up compared to the other. Inflation should not overshoot, in my opinion, because rains have been pretty good so far. Though the distribution in a lot of the kharif growing areas, specifically wheat and paddy, have been a little bit on the lower side, but there's still hope in the next couple of months. And if if God is willing and luck favors us, which it will, and God supports India, I think food inflation should not be a risk, as it is a risk with a lot of other economies across the globe. So I think better placed compared to the whole world at this point of time. But with the world going into a slowdown, we obviously will feel the pinch as well, but relatively better placed compared to the rest of the globe. So I think sectors which are standing out, Rajshekhar will probably come out with that in the evening mailer tomorrow, as we promised every Friday evening, on how the entire sectoral presentation is in terms of D-days, so on and so forth. And therefore, autos have held up pretty well. Banking financial names have done extremely well. You've seen a lot of action that happened today in the pharma names. So with a lot of volatility happening, I think a lot of pharma names have started picking a lot of attention. And a lot of pharma stocks had good moves in today's trading session. Whether that continues, if global volatility persists, that can be a good sign for the sector as a whole. But FIs have been generally increasing their allocation, substantial allocation to banking, financial, autos. Even FMCG has received a fair bit of allocation from FIs as well. IT remains a little bit on the sidelines. And pharma probably seems to be a little bit of a favor if it does, because of global volatility the next few days. So I think with this, I think let's take a few queries. But looking at data points, distribution days, I was already been saying how the markets will react in the next few days and weeks. I think accordingly we will adjust our position, and one should also be looking at that. So Rajshekhar Vakar, you can go ahead with the queries then.
Just one information as we started speaking, Bank of England has raised interest rates by 50 bps. Just now a notification has come up. This is the highest rate hike they have done in 27 years. So you can see the impact, how the inflation is playing out globally. Starting with the US, UK, everywhere, central banks have been raising interest rates. Okay, we'll take few queries. There have been lots of stock specific queries already.
Raj, if you want, I'll take in some queries.
Sure.
Yeah. So the first query I'd like to take is Asahi India Glass.
Sorry, I didn't get you.
Asahi
Okay.
India Glass. Yeah. Yes, this stock is currently in our buy watch list as well, and the stock is hovering around its pivot, and the stock formed a cup with handle base. I mean, on the positive side that we can look at it is in terms of the rating front, the technical front, and even on the results side as well. I mean, first let's talk about the result side. If we talk about the YOY comparison or the QOQ comparison as well, the stock delivered a decent result, and the stock is into automotive glass and as well as your industrial glass, and I mean the windshields and all the stuff. And the stock is like one of the leading, not one of the leading players, one of the leading players in its segment, like in the automotive segment. And if we look outside, around out of 4 cars, 3 cars will have your glasses from your Asahi India Glass. The major names such as your Maruti Suzuki, your M&M, Tata Motors, all of them use it. And the company now wants to go into at the repair segment and the end-to-end segment as well. So overall, in terms of the QOQ aspect as well, the company delivered a good result. Even the EBITDA margin had a minor contraction to around 24%, but still it held up. So overall, the result wasn't a disappointment, and it was really on a good front. And talking about the ratings, the buyer demand can be seen good at A minus. Why? Because every time we talked about technicals and in terms of your base formations, you always see how the base is forming. During the base formation, when the stock is declining, is the volumes drying up? So in this, as Rashikar was pointing out, when the stock was falling, you could easily see the stock, the volume was drying up. So that is like a good sign. That is distribution is not happening. That is your big money or your smart money is not exiting the stock. And when on the right hand side of the cup, that is the accumulation side of the cup, you can see big volumes coming in when the stock is moving higher. So you can see accumulation happening in the stock. And with the accumulation, you can see the stock is also reclaiming its key moving averages. So good activity around the moving averages. Reclaiming the key moving averages on above average volumes is a really good sign. Plus, the other parameter that we always talk about is the RS line. So the RS line making new highs or the RS line trending higher. So if you look at the right hand side of the cup as well, you can see the RS line steepening up. So that is a really good sign. And talking about the number of funds as well, the number of funds has also been increasing every quarter and quarter. So with good results, good accumulation, stock moving higher above its key moving averages, and just trading around its pivot is just need like probably a breakout can be anytime soon. So it's a good stock to watch out for till the point in time that green line, that is your 21 DMA, is getting held up as well. So overall, it remains really good. So let's see how and when the breakout comes in. So overall, the stock does satisfy the canceling parameter. It's just we're waiting for the breakout to happen. And the second point as well, even being a proxy play on the auto sector is also is in flavor as well for the last couple of months, and is the one of the few best trending sectors that was the first to reclaim its 50 and 200 DMA. Raj, the other stock I like to discuss is Siemens.
Sorry?
Siemens. So yes, Siemens did provide a breakout, and the stock is trading like around 7% off the pivot now. And entry at this point would not be advisable, as we tend to say that according to the William O'Neill's rules, that you need to buy it as close to the pivot as possible. Maybe around 0 to 5% range would be advisable for most stocks. And overall, you can see the number of funds has been increasing, and even the result was on a good front as well. And what's working for the company in terms of in the fundamental or the qualitative perspective is that it has a very diversified presence across industry. The focus is on digitization, automation of products, even localization of products, even healthy balance sheet and high cash flow. So overall, what the consensus is building in for the stock is good, like double-digit growth across your revenue, EBITDA and PAT. So overall, the fundamentals are playing well. But on the technical front, you can see even the RS line at the moment is trending downward. So overall, at the moment, new entry or fresh entry into the stock is not advised, and one should wait out probably the stock to get back to near the pivot, or maybe to consolidate around the key moving average such as your 50 DMA, and to probably take support or reclaim that 50 DMA on above average volume. That would be a really positive for the stock. The other stock that I'll discuss is FCL. So one of the queries for FCL.
So which one?
FCL, Fineotex.
Sorry.
FCL, Fineotex Chemical.
Okay.
Yeah. Yeah. Thank you, Raj. Thank you. So again, like one of the stock was proxy play on the textile industry. So chemical that goes into the manufacturing, the distillation of your within the textile industry, and which was probably in favor for the last 6 to 8 months. But what we always talk about is like why I specifically took this stock is like one would see the good ratings and like EPS strength of great at 91, price strength good at 87, and even a buyer demand at A+. But the two major things that we always talk about is be be in the direction where the smart money or the big money is. So we always talk about the number of funds. So the number of funds in the stock at least should be 7 or more than 7. So till the point in time the smart money doesn't come into the stock, one should wait it out. And the number of funds for the stock is just still at 8. It's increasing. You can see for every quarter, the number of funds are increasing. So maybe sometime it will happen. And the other thing that is the most notable and that is a clear-cut avoid at the moment is this stock is forming a stage 4 cup with handle base. And however how good the story might be, how good the results might be on the technical front, if the stock is forming a stage 4 or higher base, then it is not advisable to enter into that stock, because late stage bases are prone to failure. Very few stocks have been able to continue adding on to the bases, and stage 4 is the kind of base where most of the stocks fail out. So let's see if the stocks can sustain above the base, or the base counts get reset or not. So that is why I took this stock to discuss these key findings. Thanks, Raj. If you want
So
to take
Vikar, I'll take a few queries now. I'll start with ITC. I'm seeing a couple of participants have asked about ITC. ITC has been in the limelight recently after a huge consolidation. The stock has been the stock broke out, and you can see the consolidation. I'm talking about around 200 levels. Recently, a stock gave proper breakout, and you can see it is currently trading at 300 levels. Also, a recent breakout which happened July from stage 4 flat base is also a successful one, as the stock rallied 10% from that level. It has come up with a good set of numbers for the June quarter as well. You can see revenue has grown 33% and EPS has grown 38%. Even though the input costs have been increasing, the company is able to report good growth in its bottom line, that is profits, which shows the experience the company has in terms of operating performance. All the segments in the company, that is hotels, paper, cigarettes, all the segments have seen good growth rates. Especially hotel business has seen a very sharp surge in their growth when we compare with year-on-year basis. This is because last year we had some restrictions on the travel, so that is the reason we have lower base effect. So in the hotel business, so that's why the hotel business grew nearly 3x on year-on-year basis. Other businesses, paper also grown 30 to 40%, and cigarettes have also grown significantly. So on the results wise, the company is a reported very good set of numbers. A company of nearly 4 lakh crore of market cap growing at 30 to 40% shows the growth is still there in the company. That is the reason investors are taking fresh positions in this particular stock. I can see a number of funds have also increased. Currently, around 1,500 institutional funds are invested in the stock. That is still that number is increasing. Again, signifies the company's performance both fundamentally and technically. Currently, stock is trading above its ideal buy zone. So if you are having this stock in your in your portfolio, you can continue to hold it in your portfolio. This is a highly stable company. There won't be volatile moves, even though the market is highly volatile today. The stock was reluctant and it moved just in a narrow range. That shows the stability the stock has technically. You can keep 50 DMA, or if you are more risk averse, you can keep 21 DMA. Otherwise, you can keep 50 DMA as a stop loss. Initiating a fresh entry, according to O'Neill methodology, is not advised at this point because of slight extension from the pivot. Uh, However, if you are already having this stock in your portfolio, you can continue to hold it. Now, there is one query on distribution days, which is related to our methodology. Distribution day is when Nifty declines 0.2% or more on volume higher than the previous session. So the importance of distribution days is that currently we are in confirmed uptrend. So now the risk factor is that we are not sure when the market will top out, right? We are not, nobody knows how when the market will top out. So it's very important to track the weakness in the market. So tracking distribution days will give that signal that the weakness in the market is increasing when the distribution day count is also increasing. So that is the reason when the distribution day count accumulates to 3 to 4, will change the market status to uptrend under pressure. That is that is the stage when we start adding stocks very cautiously. Once currently we are in confirmed uptrend, so will be our exposure towards the market will be 100%. So all the cash will be deployed into the markets, and our bets will be maximum during confirmed uptrend. Today I think the volume was on the lower side. I have not checked the today's volume. Also the Nifty closed just 0.04% lower. That is a flat closing. So this is today is not a distribution day clearly. I'll take another Zensar query. I can see the story of this company. Fundamentally a very good company, but however, for the last starting from January, you can see the stock has been on the downtrend. I can clearly see it faced resistance at its pivot, that is 539, and since then I can see the story. It has been the downtrend. There is no support for this stock at this current moment. It has been trading, making new lows, lower lows, which is a bad sign. You want the stock to make higher highs, but that this stock is going in reverse. Also, the volumes on the down days is also above average. That indicates institutions exiting the stock. Again, this number of funds invested in the stock has also declined 12% in the last quarter. That indicates around 14 to 15 funds have exited this company, which is a bad sign. If you are looking to take a position, these are the very bad signs. Technically, the stock is not looking good. You can see the RS line is also trending lower. RS rating of 5 is very poor according to our rating mechanism. It is trading below its or its key moving averages. So every factor is not advising us to take positions. Clearly, it's a no buy zone stock at this current moment. If you are having this stock in your portfolio, it's better to exit stocks like these which are making losses. You should always cut your losses at 7 to 8%, because capital preservation is highly important. If you are losing 40 to 50% in a single stock, then it's very difficult to break even in another stock, because once you lost 50%, you need to gain 100% in another stock to break even. So gaining 100% in a stock is highly difficult, as most of us know here. I'll take a Federal Bank and then Pokar might take a few more queries. Federal Bank, I can see a disclaimer here is that it is our model portfolio stock. Our premium subscribers would know this stock was added to our model portfolio recently. That is July 19th, the day after we changed the market status to confirmed uptrend. You can see the reason we added the stock on July 19th. That is where the cursor is. The stock gave a very good breakout both on price and volume wise. Uh, the stock closed near the day's high, which is a very good price action. On the volume front, also you can see it was above average volume, around 2 times the average volume. That is one of the good indication we look for stock when it is breaking out. This on the day of breakout and on the day, a couple of days before the breakout, also the volume is very high. That indicates good institutions are taking accumulating this stock. After breakout, the stock is slightly trading sideways, but it is holding its pivot of 104, which is a good sign. If the 21 DMA is breached, but then we might look for exiting this stock. Otherwise, we will continue to hold it in our portfolio.
Yeah, Raj, Vakare.
Yeah, okay.
Yeah, I'm taking some queries now. Can you give me the chart for Minda Corporation?
Sure.
Yep. So I mean, before even talking about the stock is expected to come up with result tomorrow. So till the time the result is out, even if the stock breaks out, would we advise not to take any position into the stock because the results can create some kind of volatility. But still, a good story, a good stock to watch out for, and definitely should be one when the stock is trading near its pivot, should be one's watch list as well. I mean, overall, we've been talking about the recovery in auto sector. I mean, the semiconductor chip issue easing out, plus your, I mean, the demand recovery in your PVs and your two-wheeler segment as well. I mean, what's going well for the company is like the company is constantly focusing on new areas as well, how they can increase their content per vehicle. I mean, if they increase the content per vehicle, that will lead to increase in the margins as well. So, I mean, the companies focus on like many things such as your keyless entry solutions. I mean, they're already in talks with multiple OEMs. I mean, which can increase the content per vehicle to 3 to 4x. They even want to aggressively focus on the electric vehicle space as well, related to battery chargers, AC/DC converters, BMS modules, motor controllers, sensors, telematics, all those stuff. So all the technology related stuff which can probably lead to higher realization and higher content per vehicle for the company, which in turn can lead to higher margins for the company going forward. So overall in Q4 FY22 as well, the company delivered a good set of numbers, and similarly can be expected for Q1 FY23 as well. So tomorrow results can be a good watch out as well. Overall, if we talk about the technicals and how the stock, what the stock has been doing currently, this stock is forming a cup with a handle base, and you can see good accumulation on the right hand side of the cup, which is a good positive. And I mean, the small dip in the RS line or the RS rating is majorly because like when the stock forms the handle part of the cup with a handle, volume should dry out and the stock tends to move in a sideways or mildly corrects as well. So that is what the stock is doing at the moment. So let's see if the stock is able to break out post the results or not. And talking about like the other ratings and everything, like I mean the superior fundamental profile can be seen in good EPS strength as well. Buyer demand remains really strong at A plus, and overall the number of funds that are like entering into the stocks is also increasing as well. So overall, a good story to watch out for. And tomorrow is like the event day for the stock. And let's see how if the stock post the result, if the stock is able to provide a breakout on above average volumes or not. Uh, Rather
Vakar,
next.
Take Kiri. Sorry to interrupt. Take
Yeah,
Kiri.
no problem. Yeah,
A lot of questions on Kiri have been asked.
yeah, sure. Thank you. Sorry, guys, for not. I mean, we may miss out some stocks, so really sorry for that. I mean, overall, if we talk about it first in terms of like how it is satisfying the canceling parameters, not at all. I mean, if you guys can look at the at the ratings, that the EPS strength is like very poor at 20th price strength. And 40 is really poor. And even if you talk about the RS line as well, it's just being highly volatile, and post the spurt in your RS line, it's just been falling. And Raj, can you show me the volume bars at the bottom? I can see good distribution happening. So I just wanted to confirm it out. The volume bars at the bottom. Yeah.
Okay,
Yeah.
okay. This is not moving. Okay.
Yeah, so yeah, that's what I was talking. So as you can see, I mean, once the high move in the stock, if you look at it, the stock has been declining on above average volumes and has breached its like major moving averages, like the cluster moving averages, 100 to 200 DMA, 50 DMA on above average volumes, which is certainly not a good sign. So any entry into the stock, I mean, at the moment is not advisable. I mean, the stock currently is not forming any kind of base pattern at the moment, and even it's highly volatile around its key moving average as well. And even the relative strength or with is not there with the stock. So if someone is holding Kiri, I mean, initially according to William O'Neill's rule, what we always talk about is the 7 to 8% stop loss rule. I mean, that was the ideal point. One should have probably moved out. And if one sitting in profit, then definitely should have moved out now. Or otherwise, like the key move out signals or the key exit. So you're facing a loss of 8%, you probably should move out. That's it. Yeah, that's the rule. Move out, and there are multiple opportunities that the market will present, and there are multiple breakouts happening as well. The market's in confirmed uptrend as well. So one can definitely enter in any of them.
So,
Okay.
so Vakar, I think just stay on Kiri. I think, guys, this is a very interesting observation, right? So I think the whole purpose of us having these webinars is also in terms of moving up the learning curve, right? So look at what do you think is going wrong, right? As Vakar was saying, is there a proper base being formed? We always speak about left side of the base, right side of the base. Look at the price movement and the volatility associated with the stock, right? It is clearly getting reflected in the EPS rating. What does the EPS rating show you? The earnings trajectory that is happening on a quarter-on-quarter basis sequentially, and how the earnings growth also has been on an annualized basis as well. In the industry that Kiri is in at this point of time, I'm not getting into large detail because we've got some few queries to cover as well. It is very, very volatile, trust you me. I think specialty chemicals as an industry is one of the most complex industries that one can really study, because what kind of products you make? Are those products in demand locally from an import substitution perspective, or what are the export opportunities for those products? If export opportunities are there, who are your global competitors, which in a large scale turns invariably and inevitably to be China. Second, input cost dependency is huge. So I think one input cost for one might be the output for the other. But a lot of companies are actually sourcing this from outside India. Though PLI schemes have been announced, they might do backward integration. The end product prices ultimately depend on that. Third, you have to see what kind of applications are there for specialty chemicals. Are there generic chemicals? Are there really specialty chemicals, which is special chemicals within the specialty chemicals? And three, I think in terms of the overall production capacities itself, how much are they able to sufficiently target in terms of the end audience as well? So yeah, I think we hear about China Plus and so on and so forth. But this chart is indicating a lot of things at this point of time from a learning perspective, right? There is no base that is probably being seen at this point of time. RS line spikes higher, but you see the kind of action that happens immediately after that, right? The kind of action, this circle, this area, right? After it has hit a huge high, it suddenly spikes down and comes to the base where the RS line has started hitting a new all-time high. So I think there might be some indications in terms of a proper base formation that probably happens, which is missing in this case. Institutions, the shares held by funds, 1.5% are going down. The return on equity is very poor. Last quarter's top line was a clear miss. You're talking about in an environment which probably is reeling in terms of slower demand. So I think a lot of factors need to get incorporated. It's not just in case of Kiri, Brajesh, or everybody listening here. I think generally, I think when you're looking at charts, generally when you're probably looking at a sector, as we've time and again been saying, look at the sector construct, look at within the sector construct, have a look at studying the top leaders of those sectors, how they are performing. Also study the laggards of that sector, because that will give you a clear picture in terms of how leaders and laggards and why leaders are the way they are at this point of time. And there are these mid companies as well, where there can be some exceptions in that mid cap universe as well. But are they showing exponential earnings growth? And is the chart indicating that? So I think keep in mind, guys, I think you have to have a very holistic view. सिर्फ ऊपर से देख के नहीं होता है. Study a little bit more. Have those weekend study sessions. Go through the learning articles. I'm pretty sure I think we are doing that. We are also learning every passing day in the market. But I think we can become better investors in this. Just wanted to share this, right? Thanks.
Thanks,
Thank you, Marish. Yeah, thank you, Marish.
It's, I think one more point I would like to highlight regarding Kiri only. As Brajesh pointed out, he has bought at the bottom, that is on the spike day. Just checking what happened on that particular day in the news, I have checked, and there is some news appeal the company has made in Singapore, and they have won it. The news came out on this particular day, and the stock hit 20%. But after that, you can see everything that the gains the stock made on particular day was sold into, and again the stock is back to square one. That is the pre that the overall gap is filled, and it is trading at the previous levels. So it's very important to look at stock in a price volume action wise. Do not look for any news based events or taking investments based on the news, because that might be already sold into or bought into. So we never know how the stock will react after that particular news.
Yeah, Raj. Thank you for the analysis. Now let's take in some queries. Like
Sure.
the time is passing, so like let's take in some queries quickly.
Lumax, I think.
Lumax, yeah, one, yeah, already in my list. Already discussing them.
Sure.
Lumax, yeah.
Lumax Industries.
Yeah. Yeah. So talking about Lumax Industries, I mean, the stock is very well moving with the auto sector as well. I mean, just if when time permits, would want to give like a small brief about what the company does. So the company is into the automotive lighting segment, and in the PV space has around greater than 60% market share, with relations with more than 90% OEM, majorly like with the major revenue contributor is your Maruti, and the other contributors are M&M, Hero MotoCo, and Honda. And coming back to the chart of the stock did some good price volume action. If it, it's not a base formation, but if you look at this right hand side of the stock, you can clearly see the RS line moving higher, which we've been always accounting for. Like, look at the RS line, you can see something going on there. Plus, in this, you can see good accumulation when you can see a spike in the RS. When you saw the spikes in the RS line, you can clearly see a spike in the volume as well. So overall, what Rajshekhar was probably advocating about was like, look at the charts, study the charts, is like see the price volume action in conjunction with the RS line. So the stock did reclaim its key moving averages with good price volume action, that is above average volume. So overall, it's a really good sign. And the second thing, like similarly, the number of funds holding the stock, number of funds holding the stock has been increasing as well. So overall, you can see something good happening with this stock. The other stock that we look at it is Ceat.
Which one, Bokar?
Ceat tires.
Seat.
Ceat.
Okay, Seat.
Yeah, no problem. So, talking about again, on like how the stock reclaimed its key moving averages, you can see good accumulation happening here. What Raj is pointing out, even the price volume action, if you guys see, it was really good, and the stock did come out with its recent results. And overall, what was highly expected that the cost inflation did hurt margins of the company. There was like unprecedented rise in cost inflation, and overall gross margin for the company have dipped to an 8-quarter low. That is around 31.7%. But looking forward, or what the management is commenting is that the overall demand still remains buoyant. The supply chain constraints are easing for the industry as a whole, and the OEM demand still remains robust in terms of your PE to two-wheeler sales, and even they have a subsidiary in Sri Lanka as well. So despite the hardships that Sri Lanka is facing at the moment, the Sri Lankan subsidiary did well. So overall, with around a normal monsoon expectation, good crop output going forward, we can see some kind of positives happening for the stock going forward. But overall, at the moment, fresh entry in the stock would not be advised. But overall, a good stock to or a good a chart to study at the moment. Can you give me KIA as well? Like been seeing some.
Vakar, since you're doing auto anchors, let's do Sona.
Okay,
Just
no problem.
Let's finish auto anchors at one.
Chalega, no problem. Give Sonacom.
Sonacom
start. Already at 5:27. Let's try to rush it out. Yeah. So like we are talking about the stock. The stock has been like on a declining spree, or have been consolidating in on a negative kind manner, which is currently in the opposite phase to what the auto sector is doing at the moment. So once like a leader in probably in the left hand side in the chart, if you look at it, but in the last few months, the price volume action has not been supportive of the stock, and that's what we always advocate is like look for price volume action. Stories will definitely lead you stories will lead you to good stocks, but once like you found a good stock, enter and exit only on the basis of your price volume action, because that is what is prima facie most important. So talking about the price volume action for the stock at the moment, the two things that we primarily advocate about is base formation and your accumulation distribution and the RS line. So the RS line at the moment is trending downwards. The stock is trading well below its key moving averages. Both of them are key no-nos. And overall, the stock is 31% off highs, where if you compare with your Nifty, or you compare it with the auto sector, which is just around 6 to 7% off highs, trading above the 50-200 DMA, the stock is being a laggard. So overall, if we talk about it, it's a clear-cut no to enter in the stock at the moment.
We can actually take Rajratan. So Prashant had asked this question.
Please, Rajratan.
It's a beautiful chart. Beautiful breakout in June.
Beautiful chart, beautiful story as well.
Set of numbers. Yeah. So fantastic set of numbers. बहुत बढ़िया थे numbers.
100%.
Management was also is very, very bullish. And by management being bullish is like all managements are historically bullish itself on what they look at, but they're actually delivering on numbers.
100%
the only risk factors that are there is because of the global slowdown. Can global OEMs actually start cutting down in terms of production lines, so on and so forth, with this China-Taiwan issue? If it escalates, does that semiconductor issue come back to fore? So I think all those elements are there in terms of the core OEMs, and they're expanding their lines both in Chennai and the other plant, which is one of the highest, the largest plant, single-use plant, for which they're making wire beads. So I think good story. The stock also gave a beautiful breakout and significant amount of returns. However, you're seeing some profit booking at the top. That is probably happening. You've seen this whole cluster of blue dots getting accumulated right from the break, just before the breakout, right? So the blue dot is obviously a sign which is a pre-indicator in terms of the stock making a good base on the right side, and has to be kept on your radar. So if the fundamentals are good, which in this case were, I think, look at the EPS rating. It is in fact improved with the passing quarter as well. The blue dot line, then the blue dots were actually accumulating. The breakout happened on very, very strong volumes, and it continued a good move upwards. RS line is trending a little bit lower because of the profit booking that you've seen, above average numbers. But I think the best way to do this is now track the 21 and the 50 DM and the overall market conditions. So I think this is how I would put it. So I think mostly auto anchors we've covered. Let's go to a few of these pipe companies, Vakar, APL and Astral.
Sure.
Oh, which one, Vakar?
First start APL Apollo. You can go with APL Apollo.
I think we are 1 hour past this session.
Yeah, so we try to discuss it as quickly as possible.
Vakar, Rachikar, and guys, I think, I'm being very honest and very candid here. Even if we discuss less amount of queries, I think the crux is that we discuss quality part in those queries that we are discussing, right? Anything else, please, as I've always said, mail into us, write into us. We will come back to you. But discussing a little bit of all these qualitative aspects become very, very important. Have a look at a report what Vakar was saying, right? He just mentioned off highs. Now, as per the O'Neill lens and what we've been seeing over the past few decades, in a market condition like these, if certain stocks have held or have not corrected 15-20% from their highs, means that the stocks are showing relatively better strength compared to not just their pack, but the rest of the market as well. So few of these parameters, what we have incorporated in our report, which came a couple of weeks back, 3 weeks back, have a look at that. Have a look at stocks which are hitting new RS highs. Because in markets like these, I think stocks which are hitting new RS highs can have strong momentum tailwind with them as well. So I think we'll take a few of these pipe companies and then we'll probably call it a day.
Thank you, Mahesh, for the inputs, and we'll try to discuss it as in depth as possible with the time permitting. Can you show me the stage count? It's not high, I know, but just wanted to confirm it out. Yeah, 2B. So, a low stage count base, which we always advocate is like stage 1, 2, 3 is the ones you should be looking out for. Overall, the stock has been consolidating and is just like 6% off highs. And what Raj has drawn on the right hand side, the arrow is like you can, with the arrow at the top, you can see the volumes at the down as well. Like the stock has been moving higher, and which is not just being moving higher, it's been moving higher on above average volumes, which is a really good sign. And the stock at the moment is just 6% of the pivot. So a good stock to watch out for in terms of the fundamental story, the qualitative aspects behind it. And similarly, the big money or the funds are also quarter on quarter coming into the stock as well. And won't be discussing in depth about the recent stock result, but as you can see, in the last 3 to 4 quarters, the stock has been delivering substantial growth in your sales and EPS, and similarly can be seen in the June quarter as well. The sales grew by around 43%, EPS grew around 29%. So definitely a good stock to watch out for. And with just 6% to off highs and 6% to pivot, definitely the stock can be kept on one's buy watch list or one's radar. Can you give me any other pipe company?
Astral
is fine. Thank you. So overall, once the funds favorite, you can see the stock. The number of funds holding the stock has been declining. So overall, which is not a good sign. The stock has not been able to display price strength at all. I mean, RS rating at 29 and your RS line falling to around, falling in the right hand side of the chart, if one can see. But in the recent time, the stock is showing some kind of resilience. I mean, has reclaimed its short-term moving averages like a 2150 DMA, but still trading below the 200 DMA. And what I spoke earlier, and what even Myris spoke earlier, is about how the stock is faring not just respective to its group or its industry, but with respect to the market as well. The off highs, the off highs for the stock is around 22% off highs, where the market is just around 6 to 7% off highs. So clearly, like in terms of the overall strong fundamental story as well, but still near-term headwinds can be present for the stock at the moment.
You can take Tata Elxsi.
Fine. Tata Elxsi, yeah, thank you. So I mean, overall, if it's a classical like a base on base formation, if one can look at it, like the stock is, what one can look at is the good part is that it didn't. Even on the stage 4 base, even at till the moment in the last few months with markets tumbling as well, it didn't break down from a stage 4 base. It's still holding it around, but the other thing, it's not able to provide a clean breakout as well. I mean, the stage 4 base are dangerous. So they, still hovering in a sideways direction where it's not able to break out from a stage 4 base. And what always been advocating is like stage 4, 5 higher are always dangerous bases. But overall, like a really good qualitative and super fundamental story where, even on the other parameters that you look at it, is the number of funds and your EPS and your sales growth. It's been increasing like each and every quarter. One will look at it like can the stock deliver in this quarter, and the stock tends to deliver in terms of results in each and every quarter. And similarly, the funds interest in the stock doesn't die out. The number of funds holding the stock has been increasing, but according to our O'Neill lens, fresh entry into the stock should not be done because of the late stage base. If going forward, if the stock shows some kind of correction and the stage count does get reset going forward, then probably a very good story and a very good stock to watch out for in the future. But nevertheless, a brilliant story, a brilliant stock to be studied and to be kept in the radar. Yep.
No, Vakar, point taken, absolutely. In fact, within the IT space, right, the ER&D part is something which is very hot right now. The kind of spending which is happening in terms of interconnected vehicles, what Tata Elxsi does, and you can also take the query on KPIT after this, because both of them are largely on similar lines. They are late stage 4 base, but you never know, right? Because like we had seen during the COVID times, Jubilant Foodworks, I clearly remember this example. Why? Because it started creating bases after bases, and in fact, it went on to create a base or a stage base of 8 or 9. So there might be a few exceptions to those rules. This might very well turn out to be a 5-digit stock as well. But generally, I think what we've seen is late stage bases actually have a little bit of issues going forward. The best way, if you're holding it, right? The recommendation is the best way if you're holding it is to track the 21 DMA in a market like this very, very closely on late stage basis specifically. And if that 21 is being broken on very heavy volumes, alternatively the 10 weekly on a weekly basis, and how the monthly bars are also happening, right? So I think if you have the combination of all 3 factors together, put in volumes for that specific sign or a signposts of what happened for late stage basis, I think that is something to be observed and monitored, specifically in terms of late stage basis, and keeping in mind the volatility in the markets that we currently are at this point, because we've seen a huge pullback from lower levels. So I think you probably need to be a little bit cautious on these 2 parameters for late stage stocks. We can take KPIT.
Yeah, Raj, can you take KPIT and probably like we at 540, so like a couple of stocks and concluded off?
I think I'll take this KPI and we can call it a day. And yeah, as mentioned, you can always write to us on our email. We'll try to explain in detail what are the levels we are looking into and what is our rationale behind uh, initiating position or exiting position. We'll try to explain most in depth in on email as well. We are talking about KPIT. You can see here stock has been in a very narrow range recently. Though the volumes are on the higher side, above average, the price action is very narrow. This is very rare because volume is there because highly activity is going on. That is buying and selling is happening, but the stock is not able to go higher or go lower. So there is no clear momentum which is there in the which is lacking in this particular stock. It is clearly trading near its 200 DMA, which is uh, just 1% from the above the current market price. Stock is not able to find a clear momentum. Couple of pointers is that EPS is slightly at 52, which is lower according to our mechanism. RS rating also has come down. Actually, RS line is trending lower. You can see here. This is because the general market, Nifty and overall broader markets are trending higher. But this stock is not moving anywhere. So it is an underperformer when compared to general market. That is the reason RS line is trending lower at this particular point. On absolute terms, rating wise, 78 is okay-ish. It is okay for us, but the we like to see the momentum, that is RS line trending higher when we are initiating position, and there is no proper base formation here. There is a tight area formation is there at this particular point, but we like to see a good consolidation or Kpit handle any base pattern before taking a position. And if you are holding this stock in your portfolio, and you can always follow our sell rules. That is, if the loss is at 7 to 8%, you can exit. That is our hard sell rule. Technically, it is trading 1% above its 21 DMA. So that level also can be kept 2% from the 50 DMA. So 2% you can keep it as a stop loss on technical basis. However, if you are having good profits in this particular stock, then a level around 480, 460 can be kept as a stop loss, because at that level the stock has found some support recently. I think we can call it a day. I think it's already 5:45. Mostly question.
I think we should.
Yeah, thanks everyone for joining Stock Durbar. We try to educate our participants regarding our canceling methodology and our rationale, how we are approaching the market. So I think we have explained mostly our methodology in this Stock Durbar as well. We are conducting everyday pre-bill and post hours, that is after hour sessions as well, to discuss how the markets are about to play and during the pre-bill, and how the markets have behaved during the day in the after hours session. So please be watchful in that space as well. And if you have any unanswered queries, please write to us on email. I will definitely answer them. Thanks everyone for joining the Stock Durbar.
Thank you.
Thanks.
Thank you everyone for